Solana is sitting right on top of a critical support zone. Right now, buyers are attempting to defend our Fibonacci support zone between 81.57 and 81.62, and what happens next may shape Solana's next major move. May ended with weakness, price closed near the lows of the month, and as we begin trading on 1st June 2026, sellers still appear to have short-term control. But here's the important detail many traders may not notice. Despite all the recent selling pressure, Solana is still holding above April's low. And for now, that tells us buyers are still defending the structure underneath the surface. Because markets that are preparing for complete collapse usually do not continue defending prior structural lows. So while Solana currently looks weak, the chart may actually be telling us something more balanced is happening underneath. Before we go any further, if you enjoy this style of structured crypto trading analysis, subscribe to Crypto Trading Mastery. We publish crypto market structure breakdowns every day. The next key test for buyers is very clear. It would only take a break above the last major swing high, the 11th May high at 98.22, to completely reverse the current daily market structure. And if that happened, the conversation around Solana would change very quickly. But buyers still have major work to do before they can reclaim control. Because overhead, we have a Fibonacci resistance zone sitting between 105.03 and 105.41. That resistance zone continues suppressing upside momentum, and until buyers can break through it, sellers still have the advantage. Now, this is where the chart becomes extremely interesting, because Solana appears to be preparing for something larger. The monthly ranges are showing signs of compression again. We saw a slight expansion between April and May, increasing from 13.79 to 18.22, but overall the ranges remain historically tight. And compression like this cannot continue forever. Eventually the market breaks into expansion. The question is simply which direction. A quick mention, we also publish a free daily crypto trading newsletter. It's a quick 5-minute read covering Bitcoin and altcoins. You'll find the link above and in the description. There is another important factor traders should keep on their radar: June 21st. This is one of Gann's seasonal dates, periods where markets often begin strong directional moves or major shifts in momentum. That does not guarantee anything will happen, but it absolutely gives traders a period to pay close attention to. Now, let's zoom out further because the bigger structure is revealing something important. From a monthly perspective, the lows formed in August 2024, April 2025, and February 2026 are all producing touches along a downline trend line. At the same time, over the last 4 months, Solana's monthly opens and closes have repeatedly congregated around the same area, slightly above and below the 82.00 level. This tells us something critical. The market keeps returning to this region. In other words, 82.00 is becoming an important equilibrium zone between buyers and sellers. Right now, sellers marginally have the upper hand. We can clearly see that on the weekly chart. Solana attempted to rally higher, reaching a high of 96.72, but sellers immediately pushed the market back down again, erasing the gains and adding further downside pressure. However, there is something equally important happening underneath that weakness. Bulls continue defending above the psychological 80.00 level, and that tells us buyers are not yet prepared to surrender the market. The true battle now becomes very simple: last week's high and last week's low. The previous week's high sits at 86.32, while the key psychological support level remains 80.00. Break above the highs, and buyers begin rebuilding momentum. Break below support, and sellers likely push for another wave lower. We are not interested in playing the prediction game. Instead, we let the market confirm its direction. And one thing we do know is that if Solana begins breaking above multiple prior weekly highs, it would be a very strong signal that buyers are regaining strength. The 98.22 high remains the pivotal level bulls must overcome. Until buyers can reclaim that level, they have very little credibility suggesting a larger move higher. And the reason that level matters so much is because several important factors are converging there. First, it is a major swing high. Second, the 2026 anchored VWAP is sitting overhead and acting as resistance. And third, the Fibonacci resistance zone continues containing price. This creates a cluster of resistance that buyers must eventually overcome. On the downside, there is still risk that Solana revisits the monthly trend line we discussed earlier. But for that bearish scenario to gain momentum, sellers would first need to break below last week's low. One final point before we finish. Notice that May failed to break April's low. That matters, because despite all the selling pressure, buyers are still defending key structure. However, the minimum requirement for bulls now is a recovery back toward May's midpoint. Below that level, and Solana continues showing weakness. So these are the levels we are watching closely. Last week's high and low, the May midpoint, the 2026 anchored VWAP, the Fibonacci resistance zone, and most importantly, whether buyers can continue defending the Fibonacci support zone underneath the market. Before we finish, if you enjoy this style of structured crypto trading analysis, subscribe to Crypto Trading Mastery. We publish these market structure breakdowns every day and help traders identify the key levels that matter before the move happens. And if you want even deeper market insight, join our free daily crypto trading newsletter. It's a quick 5-minute read covering Bitcoin, Solana, and the key crypto market structures we are watching each day. The link is above and in the description. We hope this Solana swing trading perspective has helped you. Thanks for watching, and we'll see you in the next one.